Good day everyone. My name is James and this is tutorial in commerce safety. So we're going to be looking into the calculation aspect of the last topic I taught, which is partnership. So we're going to be solving a practical question on this topic. So let's dive in. Fela and Terra formed the partnership business selling kitchen utensils with 850,000 and 650,000 of capital respectively. Their net profit for the year ended 31st December 2013 was 228,000. The two partners' annual salary were Fela 44,000, Tara 40,000. Interest was paid on capital as follows. Fela's interest on capital was 27,000, Tara 13,000. Fela's drawing was 35,000 and was charged 4,000 interest on drawings for the year. The remaining profit is to be shared equally. Prepare Fela and Tara profit and loss allocation accounts, capital accounts, and current accounts for the year ended 31st December 2013. So now the question says we should assume a fixed capital account. Now, if you remember in the last lecture, what I said about fixed capital account is the fact that when you're using a fixed capital account system, you will have a capital account whereby you're only showing your capital balances, the capital balances of all the partners in the business, and nothing more. No other transaction enters the capital account. But in that fixed capital account, there will also be a preparation of a current account that will contain the transactions that happens in the partnership. But when the capital account, only the balances of the capital of the partners will be recorded in capital account, and then a current account will then be prepared to account for the daily transactions of the partnership. So I was able to make a schedule of everything we need or we require to prepare the profit and loss allocation account, the capital account, and the current account. The first thing I would like to do is to prepare the profit and loss allocation account. Now, the profit and loss allocation account is the same thing as statement of distribution of income, right? So let's go ahead and prepare the statements of distribution of income. So we're going to have our two naira columns, right? So when you're preparing the statement of distribution of income, the first thing you're going to start with is the net profit. So we have our net profit here. So according to the question, I think our net profit was 228,000, right? So you write 228,000 here. The next item that should be considered is interest on drawings, right? So we have our interest on drawings here. Interest on drawings. So in the question, interest on drawings was 4,000 naira, right? Fela only had interest on drawings, but Tara did not have any interest on drawings. So how do we account for interest on drawings? We are going to add interest on drawings. Why are we adding interest on drawings? Because to the partnership, it is an income. Remember, it's an interest on the drawings that the partners took from the business, right? So to the business, it's an income. But to the partners taking the drawings, that interest on drawings will serve as a cost to the partners. So we are preparing this statement of distribution of income for the partnership as a whole. So we're going to account for this interest on drawing as an income. So we're going to add it. That's 4,000. So we're going to add 4,000. When we add 4,000, we're going to have 232,000, right? The next thing we're accounting for is interest on capital, right? So both of them add interest on capital. Interest on capital. So for Fela, his interest on capital was what? His interest on capital was 27,000, and then for Terra it was 13,000. So for Tara and for Terra, yeah. So for Fela 27,000. Let me have it here. 27,000. For Tara, we have 13,000. The addition of these two is going to give us what? 40,000, right? We bring this 40,000 here. Put this in a bracket to represent you're lessening it. And then you have what? You have 192,000. Alright? Now, why are we lessening interest on capital? Now remember the partners brought their capital into the partnership, right? So they will be paid an interest on that capital to the business, which is the partnership. That is going to serve as a what? As a cost, as an expense to the business, right? So the partnership are receiving the interest on capital as an income. But for the business that we're preparing for, right, it's going to be what? A cost. That's what we're lessening. So the next thing to account for is salaries. Salaries is an expense, right? So we're going to do what? Deduct it. Salaries. So for Fela, salaries was 44,000. Yeah, let's have it here first. For Tara, salary was 40,000, and then the addition of these two gives us what? 84,000. Like I said earlier, we're going to deduct it, right? So we deduct 190,000 from 84,000. We're going to have 108,000, right? What else do we need to account for? We have accounted for salaries. We have accounted for interest on capital. We have accounted for um interest on drawings. Yes. So now we need to share the profits. The profits ratio, according to the question, it said profit and losses are to be shared among partners equally. So that's why I had one over two. This 1/2, meaning that the profit is to be shared equally, right? So after all the adjustments, this is our profit that we need to share between Fela and Tara, and they're sharing profit and losses equally. So for share of profit now, we're going to write share of profits. The share of profits for Fela is going to be 1/2 times 108,000. I think that should give us 54,000, right? Yeah, I'll give us 54,000. So for Fela, we have 54,000, and then for Tara, we have 1/2 times same thing. We need to have 54,000, right? Yeah, 54,000, and then we have 108,000, and we're done with the preparation of statement of distribution of income or profit or loss allocation account. So now we're done with the preparation of the statement of distribution of income for 2013. So the comment of the question says we should prepare a capital account and current account. And remember, we are assuming a fixed capital account system, right? So remember what I said earlier in this video. I said that when you're using a fixed capital account system, the balances in the capital account is going to be fixed. All you're just putting in the capital account is to put the capital account balances, no other transaction, right? Because we're using a fixed capital account system, and all other transactions in the partnership will be accounted using the current account, right? So based on the schedule I prepared earlier, the capital account balances for Fela and Tara is 850,000 and 650,000 respectively, right? So we're going to write yeah, capital account is a credit account. That's why we're crediting it, right? So we credit the capital account balances. So this balance brought down, and then we have 850,000 for Fela, 650,000 for Tara, right? Now, no other transaction is entering here, but we have to bring balance CD to this side to make the account balanced. So here we have 850,000, and then 650,000. Then we close our capital accounts. Another version of the capital accounts. Right. So we move on to the current account. Now we need to pay the current account for the partnership, right? Current account. So I have two columns here. This will be the debit, the credit side, I mean, the debit side, right? So going to have columns here. So this for Fela, I have a Naira symbol here for Tara. We have this. This is the particulars here for Fela here and Tara here. And then we have our Naira symbol, right? We're also going to have particular here. Yes. So, as I've said earlier, you're going to account for the other transactions in the current account. So, the first one I'm going to bring in here is going to be what? Interest on capital. So, our interest on capital, which was 27,000 and yeah, 13,000. Then we're also going to have share of profit that we got from the statements of distribution of income or profit to loss and operation account. And remember clearly it was 54,000 we got for both partners, right? Yeah, we're going to have interest on drawings and drawings also. So um Fela was the only one that had interest on drawing and it was 4,000. Then drawings, Fela was also the only one that had drawings according to the schedule I prepared earlier. So he had the drawings of 35,000. It's also going to be here. So the last transaction that we are supposed to treat now is salaries. So Felia has 44,000 naira salary, Tara has 40,000. The reason we are creating salary is because the salary is an income to the partners, and this current account is paid for each of the partners. So we're creating it because it's an income to the partners, right? So now we need to get the balances, right? Now the total for this side, that's going to be 27,000 plus 54,000 plus 44,000. That's 125,000, right? 125,000. And then the total for this side is going to be what? 13,000 plus 54,000 plus 40,000. That's 107,000, right? Now, the total for this side is what? 39,000. There's nothing here, so just have a dash here. right? So this side is higher than this side. What do? You're going to bring balance C here to make this side equal to this side. So we're going to have balance C, and then we have 125 minus 39,000. That's, we have 86,000 here. Here we're just going to bring the whole sum of 107,000 as our balance C, and this is going to be 107,000 here as our balance C, as I said. Yeah. So the total close the accounts. This is going to be equals to 125,000. This one is going to be 107,000. There's nothing on debit side, so we just have the same amount. Right? So this will also be 125,000, and this will be 107,000, and we are done. So we are done with the preparation of these accounts. In our subsequent videos, we are going to be looking into more complex situations of partnership. These are still the basic accounts that we need to understand about partnership. In next videos, we'll be looking into fluctuating capital accounts, and then also be looking at how to account for goodwill, evaluation, dissolution, and more other complex partnership situations. So thank you very much for watching this video. I would like you to subscribe, like, and share this video. Thank you very much.